Hey guys, Aman
And Christina
from Our Rich Journey. So Christina and I have been sitting down with a lot of new investors lately. And one of the things that we do is we do a complete portfolio review. We see how they are investing for financial independence. And we are noticing some reoccurring themes, some lessons that could be learned. So in this video, we want to share with you the top things new investors should learn as they build wealth towards financial independence.
So the first thing that you really need to learn are all of the different accounts that are available to you and how to prioritize those accounts so you're getting the maximum tax advantages that you can from those accounts. So a lot of times we see new investors, they'll open up a robo-advisor and they'll start investing their change, or they'll just start investing little by little, but they're not thinking about the accounts that they should be investing in. We always talk about the importance of taking advantage of those tax advantaged accounts first, because in these accounts, you're protecting more of your money from being eaten up by taxes, allowing for your money to grow even more. So for new investors, the first thing that you should really start thinking about is all of the accounts that are available to you, but also the order that you're going to invest in those accounts so you can take advantage of those tax advantages that are offered to you.
Because one of the things that new investors neglect to take into consideration are taxes, and taxes being your greatest fee when it comes to investing. I mean, you can invest in all the low cost index funds and ETFs that are out there, but at the end of the day, if you are paying taxes on the dividends and capital gains that you are making from these accounts because you were not efficiently investing, that will be your biggest fee and will be a drag on your wealth journey.
So the next thing that new investors really need to learn is their risk tolerance. And we say this because we have so many people that come to us and they say they have a really high risk tolerance. And then when you see the fluctuations in the stock market, the volatility, when there are dips, these same people come back to us and say, what should I be doing? Should I sell? How should I change my portfolio? This indicates to us that they don't really understand their risk tolerance.
And this really reminds me of that quote from Mike Tyson that goes, everyone has a plan until they get punched in the face. And that's what investing can feel like. You may think that you have this plan in place that calls for investing in 100% stocks, and then you see your stock portfolio fall, you get terrified. And how you react to that moment is so important when it comes to moving forward on this journey. We have seen so many people experience a drop in the market and sell and lose money and completely walk away from investing. They become so discouraged by the first drop in the market that they think that investing is not for them. But if they would have just taken the time to do that assessment and make sure that they had a plan in place that they were comfortable with, no matter what was going on in the stock market, they would still be investing today. You know, we are strong believers in building wealth through investing. There's no other way to exponentially grow your money at your 9 to 5. You must invest.
So this leads to our next point, which is really learning about asset allocation. This can really be tied into your risk tolerance. So asset allocation involves you sitting down and thinking about how much of your portfolio you want to allocate to certain things like stocks or to bonds. Your asset allocation should really be based on things like your time horizon, your risk tolerance, and your overall goals. So understanding how you want to develop your portfolio is really important on your financial independence journey. So we are going to have a fun assignment for you guys. If you're interested in learning more about asset allocation, how you should be thinking about your portfolio and developing your portfolio, we encourage you to read the Trinity Study. The Trinity Study really lays out this idea of how you can build a portfolio that is sustainable throughout your financial independence, retire early phase of life. So definitely go and download that study, read through that study, and it will really help you understand asset allocation much better. The next thing new investors need to learn is how to properly rebalance their portfolios. So we just talked about asset allocation and identifying how you want to allocate your portfolio. But what happens is after time, your portfolio can get mismatched. All of your allocation can be completely out of whack. The way you redesign your portfolio so it goes back to your original asset allocation is through rebalancing. So you really have to understand the terms of rebalancing, how that works, and how to rebalance your own portfolio.
Now, the thing about rebalancing is that it is so important to understand why we rebalance. Now, you're rebalancing to put your portfolio back in line with its original asset allocation, but you are also doing it to minimize risk and optimize returns. It is so important that you recognize that rebalancing is a part of an investment strategy that helps you stay aligned with your risk and helps you maximize your returns.
The next thing investors should really learn about is ethical and socially responsible investing. Sometimes we have people that come to us and say, well, I really don't want to invest in this company or that company. I don't want this company to be part of my portfolio. And we tell them there are tons of ways to invest that aligns with your social and your ethical values. And so if you learn about these things, that won't be an excuse for not investing in the future.
And this is something that needs to be talked about more often because for a lot of people, they don't invest because they think that investing is bad. That they think that their money is going to go towards a cause that they don't support. Well, there are ways for you to maintain your ethics and integrity when you invest by investing in certain types of funds or companies. And the last thing that new investors must learn is don't chase the shiny new objects. You know, investing is really its most powerful when you can do it consistently over a long period of time. And unfortunately, new investors like to jump on the latest fads and they lose focus and they move their money around to different investments. This really hurts your momentum as you start to build wealth. If you are investing in index funds and ETFs one month and then all of a sudden you're investing in crypto and something else another month, you are not taking time to build wealth in that particular investment or asset. And so we encourage new investors to have a plan that calls for them to make long-term investments in their assets.
Because the key to this is really about consistency. By leaving your money in your assets that you've already researched and you already understand can help grow your wealth, that is what's going to really help you get to FIRE.
So those are our tips for new investors, but I bet there are some old investors that could also take on some of these tips as well. But we hope that all of this has given you food for thought. And as usual, if you like this video, please give it a thumbs up, subscribe to our channel, and join the journey.